Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today is Sunday, so you know what that means. It's time to go around the net with all the news you can use in the week that was in credit and finance. So in the docket for today, we have Plastiq and Visa trying to make it harder to hit sign-up bonuses. We have Chase messing up some business card applications. We have some new MLS cards in the works if you're a sports fan. Of course, with some PayPal updates, and we will close with the creation of a new payment network that may be taking aim at credit cards. So of course, if any of that sounds interesting to you, then go ahead, press the subscribe button, and let's get to work. Now, we are going to lead off with one of my favorite services, and actually one of the most favorite videos I've done on the channel here, and that is Plastiq. So if you're unfamiliar, Plastiq is a service, and this is Plastiq with a Q, by the way. Plastiq is a service that allows you to pay things by credit card. So basically, you will run your credit card through Plastiq. Plastiq charges your credit card about a 2.85% processing fee, and they will mail or ACH a check, wherever you want it to go to pay vendors and things like that. For a long time, this has been a way that you could do some basically manufactured spending, especially if you're going after a sign-up bonus, use Plastiq, send the check, and, yes, you'll incur a fee, but again, the bonus is going to offset that. Well, when I did the video on Plastiq, my use case was using the Chase Inc. Premier card to pay for my auto loan, right? You normally can't pay debt with debt directly, but, because you use this card through Plastiq, it works, and I was hit the sign-up bonus. I'll link the video down below. But long story short here, Plastiq and Visa are actually shutting down basically any payments of debt-to-debt payments. So we take a look at this. Really what they're saying is, they are no longer going to allow Visa business cards to be used for auto loan payments. Now, Visa cards will not work for any type of debt repayment either. They're just specifically calling out auto loans. Now, MasterCard and Discover still work for auto loans, student loans, and mortgages. So overall, to me, this is one of those, it was always somewhat of a loophole because, again, banks and issuers don't enjoy us paying debt with debt because, again, there's no context when you're doing this. So, from an issuer standpoint, they don't really know if next month you're going to have to make a decision between paying something else or paying them back, right? And normally these debt repayments are large purchases you're putting on your card anyways. So more than likely what's happened here is the card issuers, being the banks who have partnerships with the payment networks, Visa, in this case, went to them, Visa, I'm like, hey, look, you got to stop this, right? You got to stop letting this loophole go through. So I don't know what Visa's relationship is with Plastiq. I do believe Plastiq kind of worked with the payment networks to come to an agreement on, what's allowed and what isn't. Of course, we know American Express has long since shut down like half of this stuff. So you can still use Plastiq to pay other things that you ordinarily, would pay with a credit card. But the debt-to-debt payment, they are quickly coming to an end. I wouldn't expect it to be long before MasterCard follows suit. With Discover, there's not really a reason for Discover. Discover doesn't offer massive sign-up bonuses or anything like that. So I don't really see a reason why Discover would be affected by this. I don't know why you'd run your Discover cash card through Plastiq and take the 2.85% hit. MasterCard, again, I could see them doing it as well, or issuers that issue MasterCards as well. But I'm kind of sad to see this does really nerf Plastiq, again, from our use cases, right? So I'll still link those videos down below if you are interested. There could be other use cases still if you're trying to hit bonuses, but that was one of my favorite videos. Now that kind of bums me out a little bit. But with that, talking about Chase and the Inc. Premier, we're going to transition to our Chase story. This time, this sees Chase messing up some denials on some Chase business cards. Now, this was due to what we call like an IP address issue. So basically, folks who were applying, from the States, it looked like they were actually applying from countries that we had economic sanctions on, as the U.S., and as a result, Chase was to deny them. So, again, if you take a look at this, we're talking about Texas, Oregon, California, Arizona is the states that were affected that we know so far. But here's the letter. So thank you for applying for a new Chase account. Unfortunately, we're unable to process your application because you submitted the application from an IP address located in a country or territory subject to U.S. economic sanctions. JP Morgan Chase Bank and its affiliates do not provide financial services in countries or territories that are subject to these sanctions. So if you would like to reapply for your account when you are not in a location that is subject. So it sounds like, hey, if you really just went to another IP address, another state, they would end up approving you. So there you go. Just, if you've applied for a business card in the last few days, specifically from those states, and gotten this letter, I would definitely get a hold of Chase and sort that out. Reconsideration line, you shouldn't even have to do recon line for this, but this one's more so for awareness, and it's kind of funny, but likely a mess up on their side. Of course, more cards could be affected. We just don't know. So if you have any data points, let us know down below. But with that, we'll go to some brighter stories. And this time we're talking about new cards coming to the market, which is always fun. So, if you're a fan of Major League Soccer, which MLS, over here in the States, not football, we call it soccer, right? But they're going to get their own lines of cards via a new partnership with Avant Bank. So if we take a look at this, so Major League Soccer partnering with Avant. Avant's like a neo credit first bank, so they describe themselves as. So they've signed a multi-year partnership. This will make Avant, become the official bank of MLS, and they're going to launch the Fan Affinity card. So we don't know much about it here, but it'll be cash back likely. You can redeem, towards, MLS tickets and gear. Pre-sale tickets would be some benefits. Express entry into select events, and of course merch, because everyone needs merch. Now, in addition to that, Avant could actually make 21 different cards, because apparently there are 21 teams. You can see some of the logos here. So I could see this end up being something like a card list where you have different types of cards for, the teams. I think their core benefits will likely be the same, and you'll probably be able to, pick, your team design, and maybe you'll get, a discount at that pro shop versus every pro shop. Kind of like card list does. I can see them doing something like this. So, not a big fan of MLS myself, haven't really watched much of it, but again, anytime there's potential new cards coming to the market, I think it's interesting. Also interesting they go with Avant, not one of the bigger issues that we normally talk about. So, we'll keep an eye on that when those cards come out. But again, if you are an MLS fan, let me know down below what perks you would like to see. I think some of the good stuff Cardless has done is giving you like memberships to basically their version of like NFL Network, if you will, right? Whatever the soccer version is, or like they have EuroLeague, EPL version of that, right, on some of their cards. So that could be a neat perk, especially if it's a no annual fee card. Now with that though, we're talking about cards that are currently in existence, and we're going to talk about PayPal. So I had some folks send this over to me. It looks like PayPal is going to add some updates to their existing cards. So of course they have the update a while back that saw 3% on PayPal transactions across the board, which is actually pretty nice, and 2% back on everything else. But there are some more minor tweaks here, so let's take a look at this. Of course, this is from an email that we had from our friend of the show, Jeremy, who he got about his PayPal card. But here's what's changing. They say rewards will be earned daily on completed purchases, so you can track them in the app and redeem directly to your PayPal balance anytime. Payments made from your PayPal balance will post instantly. That's actually pretty nice. Instant access to your statements, that should be a given, and enjoy more flexibility when automatic payments. So the main takeaways here from this are that, hey, we're going to start giving you rewards, daily, very similar to how the Apple Card operates. Now, overall, I don't necessarily think this is that amazing of a thing. I think it's more so one of those things if you step up a layer and look at it the macro level. Because if you think about it, one thing that's always been interesting is like if you take your paycheck and getting paid, how most people get paid on Fridays, well, you can actually get paid on Wednesday, and it's something like every bank can do, but historically credit unions and the neo fintech banks have offered you early payment as a benefit. Because what happens is your employer usually payrolls like finalized on a Tuesday, they cut the checks or the ACHs to the banks you have on file, like Wednesday, probably Wednesday morning, something like that. And then, technically that bank has it, so they could pay you Wednesday, sometimes Thursday, right? But historically, Bank of America is like, I'm the second biggest bank, I don't need to do all this. But other banks, smaller banks, have used this as a perk to win people over, because the risk is actually, it's not really that risky, again, because you don't have to do it from every employer. But you're like, hey, I work for Ford or General Motors. That money's good. JM's good for it, right? So it's really low risk to offer that. But as we see, these smaller products, PayPal obviously backed by Synchrony, but still a smaller card, offer these things like the Apple Card. Hey, we'll give you your points instantly. I do wonder if some of these benefits end up tracking to the major issuers. Does this force them to be more competitive? Again, because does it really matter if you get your points daily? I don't really think so, because you're talking about so few points that you're not really going to do anything with. But if the masses who don't really play this game that hard see it as a benefit, then this could end up happening. So I like to look at it on that level. But again, I do like them to see making the PayPal card competitive. And I do think the PayPal card is coming for the Apple Card. They must see it as one of their top competitors, basically, in that space of a card where someone would just get one and use that card. So let me know your thoughts on that, especially what you think of the PayPal card updates if you are a holder. Now with that, we have one more story of interest, and this time around we have a new rival in the payment space being built. And that's not necessarily here yet, but it's being built, and I do find it interesting. So, we've talked at length here on the show on Sundays about the payment networks and the swipe fees, and swipe fees in the States have always been an issue. They do come up overseas as well. But those are basically the transaction fees that the merchant ends up paying, the store ends up paying when you swipe your credit card. That it's broken up between the payment network, the issuer, things like that. Basically, everyone gets a cut except for the store, and then usually we pay higher prices. So merchants are not a fan of this. So now we have a new service in development called Pay by Bank that basically looks to cut out the payment networks altogether. So taking a look at this here. So new payment platform, again, this is a partnership between Cyonic, which is a financial services consulting firm, MX, which connects fintechs to bank accounts, so think like a Plate or something like that, and Google Cloud Services, which we all know what they do. And so this is also going to offer real-time payments, but basically what they're pitching here is, hey, look, if you got customers to use this would in essence save the merchants the processing fees. Now the big thing here is that this is going to be dependent on getting customers to use it over a card to pay. Now, on some level, you could probably imagine this like something like a Venmo. You can Venmo real-time, payments to the other person's account, right? You send the money is in their account. It's basically the same thing, except making a commercial version of it that you would use to pay in store, things like that, which I think PayPal also offers a level of this as well. You can use PayPal at the terminal, scan your QR code or something. So, again, I think it's interesting because, on one hand, it's like, hey, someone sees opportunity because these payment networks push and push and push with, all these swipe fees, and they want to push back. So I don't know, it'd be interesting to see, right? Because the best play the merchants have is, well, if you use this, then I will save you the 3%, right? So your purchase will be 3% less. Or do they split the merchant fee with you or something like that? That's the best incentive. I don't know how easy it's going to be to get people to switch to this and sell them on it versus using a credit card, giving the credit card rewards programs, the ease of use and the protections that credit cards have. So I do think Pay by Bank has a lot of work cut out for them. I'm interested to see what this does in the market. Again, I don't think this is like a brand new service. It seems like a Venmo, PayPal just on a commercial level. But, I wonder how the payment network's going to take it and react. I don't think this will really bother them, actually, but I am more interested to see if, they commit to trying to push this on people. Will it have to adopt its own type of reward system, right? Would it basically be like how you can have 1% cashback debit cards, right? Something like that rolled into this, so you're still getting a level of cashback plus a savings from the merchant because, you're at least maybe splitting the savings on the swipe fee, something like that. That could be interesting to sway some people over, again, given that not everyone is a massive credit card user. But of course, let me know what you think about this and what this competitive service or competing service would need to win you over away from your cards. So anyways, guys, that's been it for the news. So if you like this one, drop me a thumbs up down below. If you found it particularly interesting, of course, consider subscribing to the channel. Again, posting content just like this every Monday, Wednesday, and Friday, and right back here every Sunday with all the news you can use in the week that was in credit and finance. My question for you, as it always is, let me know what you think about these stories specifically, or what else have you seen going on in the news. Love to get your thoughts on all of that and more down below. Anyways, guys, that's going to do it for this one. As always, thank you so much for watching, and I'll talk to you on Monday.